Hi guys, so let's now take a look into detail at the way this tariff diagram really breaks down. I just thought it would be useful just to go into a little bit more detail so that you could clearly outline this model as I've drawn it out here. Okay, so of course we're still looking at protectionism and tariffs, that tax on imports, so we can see the introduction of the tariff has been introduced, and therefore it has raised the world price in our domestic market. Okay, now of course that has meant that we've seen a reduction in imports. Imports have been reduced to Q3, Q4, so this is our remaining area of imports after the implementation of that tariff. Okay, so let's break this down. First up, what's our consumer surplus before the tariff? So before the tariff is introduced, we can see we're out here, right out of Q2, and the actual available consumer surplus is all of this area. So we can see it's absolutely huge, and this really is the fundamental reason why international trade, free trade, is so powerful. It gives an enormous increase in economic welfare. The increase in consumer surplus from the domestic level of production here right out to here is just huge. So it's quite transformative. Okay, so let's break this down. We've got A, B, D, E, sorry, I've included D there, E, F, and of course G. Look at that, huge. Right, next up, what have we got next? So we've also got to consider the area of producer surplus. Well, the domestic producer surplus is relatively small, and this is really the downside when it comes to international trade. The area between Q1 and Q3, or right out to our actual domestic level of supply and domestic level of demand, right out here, which we could also introduce as, say, Q5, there is a big reduction in the actual level of domestic production. And so that does mean that the consumer surplus is, the producer surplus is really very small. Now this is often the reason cited against globalization, that people working within these sectors have found themselves to be structurally unemployed, frictionally unemployed at best. Sometimes it's led to a generational collapse within certain areas. Just look at the South Wales valleys as an example of that, with the collapse of the mining industry there. But there's other examples as well, of course, when it comes to the steel industry as well as the car industry, which has improved in some areas, but nevertheless we can see the overall producer surplus is very small under free trade, and that really does damage those low and semi-skilled manufacturing workers, and sometimes highly skilled manufacturing workers. Okay, so there we go. That's the situation before we implement the tariff. As we implement the tariff, we can see that we have that reduction in the actual level of economic welfare. So we now find supply and demand equals just out here, level with Q4, PW plus T. So it's really reduced that level of consumer surplus, and therefore the consumer surplus is just A and D. Okay, if we look at the producer surplus, what's happened there? Well, we can also see that the producer surplus is B and C, but we've also got other interesting areas that we can highlight here. So for instance, when it comes to E, this is of course the loss of domestic dynamic efficiency, because producers from Q1 to Q3, they now re-enter that market and start competing, start producing in industries where actually, in a global sense, they are not competitive. But when they're protected by protectionism, then it does mean, yes, they can actually compete. So E represents the loss of domestic dynamic efficiency. Okay, now let's take that a little bit further. And let's have a look now at F. Right, so F, of course, is the box that represents the actual tariff revenue. So the question then becomes, well, what is that revenue going to be used for? Where is the government actually going to direct that revenue? Is it going to be directed towards investment, encouraging more research and development in particular areas? Is that going to be efficient? Lots of lovely evaluative points that you'd be able to bring out in response to what happens to that tariff revenue. Okay, and then we've got G. So G, of course, is a loss of global economic efficiency. Okay, so that just breaks down each of these areas quite nicely. I suggest that this is generally a good way to approach this with any essay on protectionism and tariffs. Okay, so this is loss of global efficiency. Okay, so interesting stuff, guys. I hope that's been helpful.